はい、皆さんこんにちは。私はマネックス証券のハッチこと岡本兵八郎です。今回はですね、運用資産額1兆5000億円を超えますインベスコ世界厳選株式オープン、愛称がですね、世界のベストの運用責任者のスティーブン・アネスさんをお招きしまして、いろいろとお話をお伺いしたいと思います。Hello, Stephen. Welcome back to Japan and welcome back to Manex.
Thank you very much. Thank you for having me, Hachi-san. Great to see you again. I think this is the third time you've had me in, so really appreciate it.
Good, good. Could you first tell us the purpose of your visit to Japan this time?
Yeah, of course. So look, the main reason really is to sort of update clients on the management of the fund, what we're currently thinking, what markets have been doing, and also perhaps give a few sort of individual stock examples of the kinds of companies that we've been buying. So we've been seeing some of the main distributors and banks and brokers and IFAs on the trip.
So I'm sure that the distributor of Sekai no Besto will have a better understanding of what's happening with your portfolio by getting update directly from you.
I hope so.
You know, Stephen, the stock market has been doing quite well. As we speak, S&P 500 and Nasdaq Composite made all-time high yesterday. Yeah. What are your thoughts on the current market?
Well, look, obviously, as you say, markets have done very well recently. I think the market has become quite enthused about the Fed's ability to manufacture a soft landing, and you know, obviously, the sort of maybe markets believe that we've seen the peak in rates. I certainly believe that. I think, you know, of course, the other key thing to think about is just how the market has been driven, and you know, principally that has been driven by a relatively small group of stocks in terms of the Magnificent Seven, the big US large cap tech companies, and that, you know, those things have really propelled the market forward. So look, as you can see from this chart, this shows the top 10% of companies in the S&P 500 and the proportion of the overall S&P 500 that those companies make up. And you can see now for the circle on the right-hand side that the level of market concentration now is as high or even higher than it was in the 99-2000 tech boom. And I think that's just something to be aware of. And I think that what that means is there are likely to be a number of companies which have been sort of left behind, that are unappreciated by investors. And secondly, I think it also provides an opportunity to increase the level of diversification within investors' portfolios, because the market itself is so concentrated.
So in this environment, what is your thought on making investment in such, this kind of environment?
Well, look, I think what it means for us is that you can find companies which are a little bit off the beaten track, underappreciated by other investors, and I think that gives us an opportunity that's perhaps a bit wider to look at. So as we discussed, obviously, the Magnificent Seven have really led the market, but I think what that means is there are a number of companies which have been left behind, a bit unappreciated, and there are also companies, though, that are related to the AI theme. The AI theme has obviously been very important, but there are companies which we think will benefit from that theme, where, for example, they have extremely rich data sets, where if you apply AI to those data sets, that's likely to drive further revenue opportunities for those businesses.
So you try to see technology stocks from a different perspective than many other market participants. Please explain your thoughts.
Yeah, no problem. Well, look, I think what we've tried to do is find technology stocks that can perhaps be a little bit more stable in terms of those revenues.
Stable.
Yeah, a bit more stable, a bit more predictable. So still with strong growth, but where they have predictable revenue streams. Many of which still will benefit from the general tailwind of AI into their business.
Could you give us a few names?
Yeah, of course. So, look, I think an obvious one would be something such as a Microsoft. Microsoft has a very sticky, stable, growing revenue stream from all of the Office products that we use day to day, Excel, Outlook, PowerPoint, etc. Also, obviously, has the Azure cloud business, which has been an incredibly powerful platform. Azure is clearly benefiting from the trend for AI, as many of the hyperscalers are. But then within the sort of things such as Office, Microsoft is developing co-pilots, which I think genuinely will impact most of us on a day-to-day basis. We will be able to use those co-pilots, and of course, I think we're likely then to pay an additional amount to Microsoft to have access to those co-pilots in the fullness of time. So again, that will be a growing, stable, sticky revenue base for the company.
I see. It's interesting that you select stocks from a perspective of stability among AI-related companies. Could you tell us a little bit about other investment that you're considering from a different perspective than other market participants?
Yeah, sure. Look, I think one of the things that we've been surprised about is how willing the market has been to assume the Fed can engineer a soft landing. And what that has meant is that a number of defensive areas of the market have really underperformed as people have become more enthused about things. And so that has left many defensive sectors, such as healthcare and consumer staples, trading at relative valuations that they haven't traded on for much time in history at all. So you're now at relative valuations which look similar to the sort of 99-2000 tech boom, to the 2008-9, and also in the kind of coronavirus pandemic as well. So I think that's actually been an interesting opportunity for us. We found it towards the back end of 2023 and earlier this year as well. We've been adding to some of those defensive positions in healthcare and some staples.
Well, Stephen, thank you for sharing your thoughts on your investment. Now, let me ask you about your portfolio as a whole. What is your overall portfolio like? Could you tell us a breakdown of industry, country, and regional allocation?
So look, as you can see from this chart here, look, we're heavily overweight financials. That isn't necessarily a cyclical bet. There's quite a diverse range of companies within that. The other thing I would highlight, obviously, we're a bit underweight technology, partly based on valuation, and also to do with the fact that we like to find dividend income for the portfolio as well.
So what do you have? What's the biggest holdings in financials?
Well, so interestingly, financials is a really broad sector. So for us, we have a number of private equity companies in there. We have insurance companies. We have exchange businesses. We actually only have one bank, which is about 2.5% of the fund. So, for example, the biggest stock in there is around 600 basis points of the portfolio. That's 3i. 3i is a private equity business, but the majority of the private equity business, so 70% of the NAV, is made up from a discount retailer. Which is a pan-European discount retailer called Action. That business has compounded very successfully for a period of time. Very high returns on capital, great cash generation. It's a really good business, but it just happens to trade within a financial. That's the only way of accessing that business.
Okay, and then what do you have in the capital goods?
Well, capital goods, again, actually, that's a pretty broad sector. So we may be just picking on a couple of examples. Rolls-Royce has been the top contributing stock to the portfolio.
And how about country and the regional allocation?
Yeah, so look, this is the sort of country breakdown. So you can see here the portfolio is underweight the US and quite significantly overweight Europe. Although I would argue that is Europe plus the UK. In that, if you look at it on a revenue basis, actually the portfolio is far more in line with the overall market. So what we've done is buy a lot of companies in the UK and Europe, which we think are at lower valuations, but where they're benefiting from international revenue streams. So actually, it's not a macro view on any particular economy.
Right. So you're saying that you are not betting on the economic growth of Europe?
Look, no, it's not a sort of general view on Europe and whether we're bullish on the European macro outlooks. But as you say, look, we have around 40% of the portfolio in Europe. That includes the UK. Now, I would say, though, that that's a very internationally diverse set of assets that we own. There are a number of companies in there, for instance, such as a Rolls-Royce, which actually has nothing to do with the UK, really. It's a fully dollarized business.
So I understand that your fund's portfolio is composed of stocks which are selected from a different perspective other than other funds out there. It seems to me that investing in Sekai no Besto along with index fund, for example, or other active fund that invests in US growth stock or semiconductor related stocks that became very popular in the market, makes sense as an option for diversification of one's portfolio.
Yeah. Yeah, look, I think so. I mean, we are quite different, as you've seen from the geographical breakdown and the sector breakdown. We're quite different to the market in terms of the way the portfolio looks. And obviously, we discussed at the outset the concentration in the market level. So absolutely, I think we're trying to do two things. We're trying to find companies which are underappreciated by the market and offer some diversification to client portfolios as well.
Well, Stephen, so finally, could you please tell us about your market outlook and your investment strategy going forward?
Yeah, so look, I think from a market perspective, markets have hit new highs, as you mentioned at the very beginning. Look, we are perhaps a little concerned that we are starting to see this impact of rising rates hitting consumers, and companies also beginning to struggle to put prices through. So I think we're trying to maintain our discipline, focus on high quality companies generating good cash flows at attractive valuations, and that's the really clear element of the process that we stick to with absolute consistency. And at the moment, I'd say some of those companies are in perhaps more defensive areas of the market that I touched on. The other thing I would also mention perhaps is that we're also finding a lot of companies in the kind of mid-cap area. So by this I mean even companies up to $20-25 billion in the US. I mean big companies, but where with so much money flooding into the mega caps, those really good companies have been left behind. And actually, look, as we know over the long run, those mid-sized companies tend to deliver really nice earnings growth over time as well. So there's definitely a lot of opportunity out there, but I think some reasons as well to be cautious about some market elements.
So in other words, it sounds like it's an opportunity for you to demonstrate your skill of stock picking.
Hopefully, yeah. Look, we're very much stock pickers, absolutely. The portfolio is built from the bottom up stock selection. So it's up to me and the team to keep working as hard as we can and generate those individual ideas which will generate performance for our end investors.
Well, I look forward to your continued success in the future. And thank you very much for coming to Tokyo, to Manex.
Well,
hope to see you again.
Hachi-san, thank you very much for having me. It's been great to see you again, and hope to see you very soon. Thank you.
Thank you.